Oh, oh, that's new.
That is new.
Okay.
Okay, well then I guess it's recording.
Yes.
Okay, so let's go ahead and get started. We have several people on the workshop already, so I want to be respectful of people's time, especially at the end of a long Wednesday here in the middle of what seems to be a long week. Just as now we're coming up to this holiday weekend, Memorial Day weekend, and we're turning the corner into June. I want to thank everybody for being on this workshop this evening. This is a continuing Money Matters workshop series that Family Promise of the Verdugos has been presenting over the last year and a half or so. And it continues to work very well in this format, doing this virtually, doing it online, especially during COVID. But even now, as sort of we're coming out of the pandemic and people are sort of returning back to the workplace and their normal work routines, maybe outside of the home, I think it all works for everybody to just sort of hop online and meet virtually, gather up some new information, maybe get some tips and hints that might be specific to what somebody is currently trying to do in their personal situation. So this evening, we're going to be talking about the ins and outs of insurance. Maybe perhaps if you saw the title of the workshop, or you hear the term insurance, you go, oh my gosh, this is going to be probably one of the most boring topics ever. And I got to give it to you that insurance, depending on who you talk to, but for a majority of people, is really not that exciting. And it's one of those topics, I think, that all of us sort of grunt and groan about, because oftentimes we see insurance as something that we pay for, but we don't get a lot of value out of. And we're always sort of questioning, why is it that we have to pay for this? Why is it that I have to have automobile insurance? Why is it that I have to have life insurance? I'm not going to get any benefit out of that. Why do I have to have health insurance? All these things cost us more money. And we just sort of feel like insurance companies just sort of prey on us by just taking our money. And in a way, oftentimes it feels like we're just sort of burning a pile of money every month that we pay for our insurance premiums and really don't get anything out of it. But I hope this evening, though, that as we sort of go back over the basics of different types of insurance policies and contracts, that you'll sort of see that why it's important to our overall financial health to make sure that we are protecting ourselves, that we're practicing good risk management, so that down the road, we don't implode some of the good work that we've been doing in terms of saving. Perhaps you've been investing, maybe you've been working towards long term goals. All of these sort of what if scenarios or emergencies that could pop up could sort of ruin what we've been working towards. And that's why insurance, I think you'll see is important, and why we need to at least once a year sort of address it. And maybe it's a good time for you to circle back on your different insurance policies, whether it's group insurance through your employer, whether it's your automobile insurance, maybe you have renters insurance, maybe even some of you have pet insurance, right? There's insurance for all kinds of different things. Maybe it's a good time to go back, look over your coverage, look at your premiums, how much you're paying. Maybe you can save some money. So I think it's a good sort of money topic for us to address at least once a year. So that's what we're going to do this evening. Like Lisa was mentioning, if you have questions along the way, feel free to just type your question into the chat, or raise your hand. You have that function on Zoom to ask a question by raising your hand. And Lisa will try to be looking out and sort of managing that, and stopping me from just continuing to talk and talk, because I definitely want to answer all of your questions and make this more of a discussion. So let's just review real quickly, what is insurance? The basis or the basics of what insurance is it's helping us control risk, because risk is something that is out of our control. Every day we do things that have a certain level of risk. And what I mean by risk is uncertainty, right? There is uncertainty in our situation's outcome that is sort of unpredictable based on our level of control. Whether we drive, whether we're walking around our house or our apartment, whether we're traveling, whether we're going to the doctors, like no matter what it's in relation to, just sort of living, it has inherent risks in it, right? And there's uncertainty that we face every single day as we sort of go about our business and do our daily routines. So insurance is a way for us, right, to have an arrangement between ourselves and an insurance company, an insurer, to protect us against these various risks that we face on a daily basis. Somebody who can sort of think of it this way, take on the risk for us, right? So driving my car to work in the morning, right? There's inherent risk in doing that. And insurance, I can transfer the risk that I'm taking by traveling LA freeways, traveling LA roads, going to work. I can transfer the risk of that daily commute to an insurance company, right? By saying, look, this is a dangerous place to drive, right? I'm not 100% perfect in terms of being a driver, and the people around me certainly aren't 100% perfect drivers. So let's transfer the risk that I'm taking in driving to an insurance company so that in the event something happens to me, to my vehicle, my property, the people in my vehicle, right? Other people in their vehicles, right? And their property, the insurance company takes on the risk of me driving every day here in California. So that's essentially what we're talking about, whether it's an auto insurance policy, whether it's your medical or dental or vision insurance policy, right? We're transferring the risk of our eyesight going bad and needing prescription glasses. We're transferring the risk of our health, right? As we age, our declining health to the insurance company, right? To pay for us to maintain ourselves and our lives, right? And to cover the costs associated with these levels of uncertainty. So why is this insurance important, right? Well, one, it has the benefit of limiting our financial losses when an accident occurs, right? So a lot of people will tell me, you know what, Brian, I really don't want to purchase certain insurance policies because I feel like I'm a pretty good driver. Nothing's really going to happen. Or I take good care of myself. I have good nutrition. I exercise. Like I haven't been to the doctor in years. Everything looks great. When the time comes, if something happens to me or to something else, I will take on the risk then, and then I'll pay for a replacement vehicle, or I'll pay the medical costs, or I'll, pay for that, new crown or whatever, right? But the problem is that when those things happen, those emergencies or the what ifs, and they certainly will, right? We just don't know when, and we just don't know how frequently, right? Um, Oftentimes people say, well, I'll just cover it then. But when those things happen, right, it could ruin us financially. And typically, as you probably know, Murphy's Law comes into play, right? Where Murphy's Law says that if something were to go bad, it will happen. Something will go bad. We just don't know when, right? So limiting these financial losses and having to pay out of pocket by having insurance protects us not only against the uncertainty of events, but the timing of the events, right? Maybe the what ifs and the emergencies happen when you're expecting a newborn. Maybe it happens when you're trying to get married. Maybe it happens when you're trying to retire. Like, it does not discriminate against what is happening in our life. So accidents and what ifs don't go, oh, wow, you're changing jobs right now. Okay, I'll wait until you switch over and then we'll have an accident. No, we typically find that these things happen at the worst possible times, right? It helps us prepare for the unexpected, right? And for the most part, if you think about it, um, it needs to play a large role in our sort of financial planning lives, right? So the purpose of the insurance is to protect ourselves, protect others, protect our family members, the people that are closest to us. It should be a part of any sort of good, solid financial plan. Okay. So when we get a policy, right, whether it's a healthcare or medical policy, whether it's an auto policy, you name it, what we're saying is that we are in a contract, we are in an agreement, right, with an insurer that has put in this policy or in this contract specific terms or arrangements for how they will protect us, right? So we're the policyholder. And the reason I'm going over this is because a lot of times in your insurance policies, you'll see this language used quite frequently. And people will sometimes ask me when they say owner, when they say policyholder, when they say beneficiary, when they say insured, insurer, like who's who in all of this? We are the policyholder. We are the person who purchases that policy, or we are the person who is being covered within that policy, right? We're the policyholder. We pay a premium, right? Typically, that's on a monthly basis. We spread it out over the year. We pay a monthly amount to the insurer to cover us under these specific terms of the policy, right? A lot of times in our plans, we have a deductible. That's an amount agreed upon within the contract where, depending on the risk that we're taking, right, we may have to cover a certain amount in an accident, um, in a surgery, in a dental procedure, right, that we have to pay out of pocket before the insurer begins to cover those additional charges, right? So a lot of times in your policies, you'll see your auto policy, you may have a $500 deductible. So what that means is that, let's say you get into an accident and it's just a minor fender bender, and the cost to repaint your bumper, right, there's no other damage, is $300. Well, if your deductible is 500, that would not be covered under insurance because your deductible is higher than the cost of the damage. So 500 is higher than that 300. You're just going to have to pay that $300 out of pocket, right? Some people have very, very high deductibles. The reason for that is they feel like, okay, I'm willing to take on more risk myself because I don't get into accidents. I'm a very good driver. I have a totally clean driving record, never been in an accident. I'll have a $1,500 deductible. And having a higher deductible will generally lower the overall annual costs of an insurance contract, right? So you are willing to take on more risk, pay a higher deductible if you were to get into an accident in order to lower what is covered by your insurance company, right? Same thing works with healthcare insurance, right? So, for example, I have a family of four. I'm self employed. My wife, she works per diem at a hospital. So, per diem means that she is a flexible part time employee without full time benefits. So, I have to go and purchase healthcare insurance for a family of four privately through Covered California, right? And I can select different insurance plans to cover my family. And one of the features, the different features of each of those plans is the deductible, right? Am I going to be going a lot to the doctors? My kid's going to be going a lot to the doctors. I may have want to have a lower deductible, so I have to pay less out of pocket before insurance starts covering things, right? Some families opt for a very high deductible in order to lower the cost of the overall insurance, right? So we got an insurance policy. We are the policy holders. We pay a monthly premium to transfer that risk to the insurance company. And we pay a deductible potentially out of pocket, right, before insurance coverage begins. So, any questions on that, real quick, before I move forward? All right, let's talk about the various types of insurance, right? One that I keep mentioning, automobile insurance. I mention that a lot because that's what we deal with on a daily basis, right? So, and it's required in the state of California. A basic amount of automobile insurance. We'll cover those limits here in just a second. In order for us to drive, we are required, right, to drive the roads of California to have an auto insurance policy. Health insurance, we were just talking about that, whether you're purchasing it privately through healthcare.gov or Covered California, or you just go directly to an insurer like Blue Shield, Blue Anthem, or you're getting it as part of your benefits package through your employer. They're giving you some level of a group health care or health and medical insurance plan, and you might even still have to pay a monthly premium because a lot of employers trying to cut costs don't make it 100% free to you. So they cover a portion of the monthly premium, you cover a portion of the monthly premium, right? So we have health insurance, we have life insurance, right? And in the same way, to cover the risk of us, God forbid, potentially passing, right? Is it for us specifically? No, it's for the people that we would be leaving behind, our beneficiaries, right? Family members, maybe friends, maybe even organizations that you want to give a benefit to in the event you were to pass away, right? So a life insurance contract or policy works in the same way. We are the policy holder. Our life is being insured, and there is a monthly premium that we have to pay for that. It's based on our age, our health, our overall medical condition, right? Because insurance companies have to determine what level of risk are we taking on based on your your current health, right? And then it pays out a benefit to your beneficiaries. We'll go over that a little bit more in depth here in just a second. There's disability insurance. What if you're to get injured on the job? You may have workers' comp, you may get Social Security disability insurance, but then some people go out and purchase a disability insurance policy as well to further cover what if I get injured and I'm missing my paycheck, I'm going to need income. And the disability insurance policy would cover against an injury and protect your paycheck. There's homeowners insurance, there's renters insurance to protect property, to protect your personal belongings against fire, earthquake, flood, other damage, stolen goods. You can get all different kinds of coverage. So these are the five sort of main areas of insurance that I want to talk about this evening and just make sure that we go over. And like I mentioned too, there's other different kinds of insurance. There's pet insurance that you can purchase to insure the health of your pet. If you end up having to go to the vet, there's insurance for that. Long-term care insurance. As we age, what if I have to go into an assisted living facility, a retirement home? There's insurance contracts that cover the costs of living in and being taken care of in those kinds of facilities. There's Medicare insurance supplements that we can purchase to add layers of coverage onto Medicare when we become of retirement age. There's insurance for a lot of different things. There's insurance when you get a rental car, when you get a moving truck. There's always, again, inherent risk in everything that we do. So let's talk about insurance. Let's talk about auto insurance first, right? So again, automobile insurance is just an arrangement with an auto insurer. Maybe you have AAA, maybe you have State Farm, maybe you have Geico, 21st Century, maybe you have Liberty Mutual. Like There's all Wawanisa, there's all these different kinds of auto insurance companies. And basically, they're doing the same thing, right? They're providing you liability insurance, right? In the event there is damage caused to other people or other property, right? If you are at fault, if you are liable, right? The insurance company is covering that. There's medical payment insurance. What if people in your vehicle have to be hospitalized? What if the person that you hit has to be hospitalized? That can be covered in an automobile insurance policy. What if you are hit by someone who does not have insurance and is driving illegally, essentially, right? Is on a California road without the minimum coverage, they're uninsured or underinsured, right? Maybe their insurance is not enough to cover the damage to your vehicle or um, personal injury. There's insurance that we can have to cover us against that person who is not insured. There's physical damage insurance on your policy. What if you damage property? Let's say you sort of run off the road and you hit somebody's tree in their front yard, God forbid. Um, there's physical damage insurance that can make that homeowner whole because of your accident. If there's damage to the tree, they need to cut it down, they need to replant it. It could be covered under physical damage insurance. What if your car is damaged in a hailstorm? There's physical damage to your car that was not your fault, it was an act of nature, um, covered under your auto insurance policy, right? We're covered for collisions, whether it's all our fault or not. And then there's comprehensive, right? All of these different things sort of make up what an automobile insurance policy is. So let's go over what the California minimums are for us to drive, right? So the minimum that we need for bodily injury, right, to somebody else, to people in our vehicle, right? California says at minimum, we have to have insurance that covers up to 15,000 per person in your vehicle or you as the driver and $30,000 per accident. Property damage of 5,000. And like we talked about, what if you get hit by somebody who does not have insurance? We have to have uninsured motorist insurance as part of our policy of $15,000, right? Per person, 30,000 per accident, and uninsured property of $3,500 minimum. So there's these minimums. Brian, how am I going to remember all this? You don't have to. If you're out shopping for and trying to find automobile insurance, right? Each of the carriers that I mentioned before, if you say, look, I'm licensed to drive in California, my vehicle's in California, they will find what your rates are based on your driving record and history of accidents, the vehicle identification number on your car, because that has a history as well, right? And your driving record. And then they'll say, look, in order to cover this make, model, and year of vehicle based on your zip code and where you live, yes, there are sort of higher areas of risk. LA County is definitely a high risk area, but even there are certain zip codes within LA County that are higher risk. They track all of this data. There are certain areas that are prone for accidents. If you live within that area, or drive within that area, your insurance premiums could be higher because the likelihood of you getting into an accident based on historical data, right, is what they're going off of. They'll be able to tell you, okay, for this vehicle, here is the minimum to drive in California, but based on the value of your vehicle, how old it is, and so on, how many miles you have on it, maybe $15,000 is not going to be enough, right? So sometimes, like if you've recently bought a new vehicle, and I don't mean just new as in brands making new, but you've just gotten a new vehicle versus the one you were driving before, oftentimes you'll have to get what's called gap insurance to cover the gap between what you bought the car for, right, and its value when it gets into an accident. So, for example, let's say we buy a car that is $25,000. As soon as we drive it off the lot, it is not worth $25,000 anymore. So depreciation on the value of the vehicle automatically kicks in. So let's say we buy that vehicle, $25,000, and a month later, we get into an accident and the car is what we call totaled, meaning it can't be repaired, right? So the insurance company deems that it's totaled. A month after we bought it, let's say that they assess that the value of the vehicle when it got totaled was $20,000, right? So you bought it for 25, it got totaled, and now the insurance company is saying, well, we only think that it's worth 20,000, right? But remember, you bought it for 25, so you are making payments, monthly payments on a vehicle that was worth 25, right? And so now they're saying it's only worth 20. So to cover that difference in what you bought it for and what it's now worth, to make you whole, right? So you get back everything that you deserve, oftentimes you have to buy what's called gap insurance to cover the gap, that $5,000 gap between what you bought it for and now after depreciation what it's worth, right? So there there's ways to cover a lot of just even very sort of short-term risks like that as well, right? So if it's been a while since you've purchased auto insurance, it may be time for you to sort of go back and review your coverage. What is my car worth now? Um, maybe you purchased your vehicle some time ago. There's a lot of miles on it. It's not worth that much anymore. And you're sort of over insuring the vehicle, right? You may want to go back to your company and say, look, maybe I need to lower my my uh, coverage. In doing so, in lowering your coverage, you may be able to save money, right? Another thing to do, it might be a good time to do, is look, I've been a customer with Geico for years and years and years. And they keep claiming on these advertisements that this little lizard can save me a bunch of money. But I don't feel like it because every once in a while I'll see my insurance premiums go up from year to year. Oftentimes they won't even tell you about that. It just sort of happens because they sent you something, it was in the fine print, they sent you an email, you didn't bother to look at it. It sort of goes under your radar. Now might be a good time to go back to Geico and say, look, is there any way for you to lower these rates? And it's also a good time to maybe shop around, do a comparison. Um, Maybe you've been meaning to get AAA and have all the benefits of AAA and towing and discounts on amusement parks. And maybe you can bundle some other insurance policies. Farmers, State Farm, AAA, they all do this where they'll give you discounts on a lot of your policies when you bundle them together. So maybe you rent an apartment, maybe you need auto insurance, right? When you bundle these things together, it can often give you discounts and give you savings. So if it's been a while since you've looked into that, now might be a good reminder to check that out. Yeah, maybe I could save some money every month. What if you were saving 25, 50 bucks just because of a phone call a month? I mean, that would be great, right? I've seen some people that have had multiple drivers, multiple vehicles on their insurance policy, say like older kids. Um, And those kids are like grown adults now. Those vehicles no longer in the family anymore. Nobody's driving them. They sold them. They donated them. They salvaged it, or they send it to a junkyard or whatever, right? But they're still paying just because they're not paying attention to their policies. So if you've gotten rid of a vehicle, if you don't have a driver in your household anymore, get that off of your policy. Um, Oftentimes, you can just do that on your policy online, or just make a simple call to customer service. Like, we're sort of unknowingly continuing to pay more than we really need to. But oftentimes we make the excuse, oh, we're too busy. I'll get around to that. I'll do that later. Yeah, yeah, yeah. I know. Right. Um, if even now is a good reminder for you to do that, that would be great. Maybe save some money every month. We sort of covered these about auto insurance. I was just sort of summarizing it. Let's talk about health insurance, right? We're not immortal, right? Even the best of us who are in perfectly good health, over time, as we age, um, as we live life, we're going to have injuries, we're going to have illness, we could face disabilities, right? And I think it is just when you are sort of thinking, sort of egotistically, that, hey, I'm invincible, that something could happen, right? And again, the health insurance protects against that what if. But let's say you've been dealing with medical issues or conditions for a long time. This is absolutely necessary. You need coverage because you're at higher risk, or there's something that you're dealing with that requires you to go to the doctors on a regular basis to be in good health, to be able to work, to be able to generate income for your household, right? So I also feel, just like sort of auto insurance, that health insurance is another one of those things that, even if we feel like, gosh, it's so expensive and it's not in our budget and I can't believe I'm paying this amount, we just sort of have to do it. We have to bite the bullet. I think it's better for us to be able to sleep at night and have the peace of mind of knowing, in the event something were to happen to me, my kids, whoever, we're covered, right? So a lot of us have medical plans that can cover certain percentages of a hospital stay, surgeries, dental plans, vision plans that can cover for contacts, that can cover for preventative care. Man, use your insurance for preventative care. Make sure you're getting the teeth cleanings and, you know, the stuff that keeps us in good health. Let's not use our insurance like once something finally does happen, right? And I think healthcare insurance plans are have really sort of expanded now to include a lot of preventative things that typically once weren't covered, right? So that's really something to look into, whether it be mental health, um, whether it be preventative like nutrition, being able to see a dietitian. Um, Look into what your plan covers, and you may find that you're not taking advantage of a lot of the coverage that is available to you. So that might be something that you want to do now, is go back over what your coverage is. Brian, I don't even know where those papers are. They gave me a folder when I started this job, and I dumped that. Go back to HR, have them do a sit down with you and summarize, what does your plan cover? What are the things that is available to me as benefits that I'm working for, that I'm probably paying a portion of, but you're not utilizing? Um, Everybody's policy is different, right? So whether you're purchasing it directly from an insurance company, whether you're part of a group plan with an employer, right, the coverage is specific to you and your situation. So if you're purchasing through Covered California and it's Blue Shield, make sure you understand what that plan entails, right? So you can always call the insurer and ask, based on your policy, explain this to me. Explain what is covered under my plan. Um, a lot of the insurance carriers will allow you to even sort of look up or research, if you will, certain uh, procedures, uh, what types of activities are actually covered under the plan. What can I do and not do that would be covered or not covered by the plan? So if you're wondering, gosh, I'm getting wrinkles. I'm getting the crow's feet around my eyes. I'm starting to age. Is Botox covered or whatever? Like, you can sort of look up, almost sort of Google within your insurance coverage, what procedures, what items are actually covered by your plan, right? So always make sure that you talk to your carrier, your insurance carrier or company, to know exactly what is being covered. Um, I just think we have to all agree that health insurance is so important, especially in our day and age where we're living longer, right? Um, there's medical research and scientific and technological advances in medicine that are keeping us alive longer. And so, to counter the fact that we're living longer, we have to make sure that we're covered, because that's a longer period of time for things to potentially go wrong, right? So, it, I just want to say it's like sort of mandatory. Now, I'm not saying that you can make your own decision, but just know that if you don't have health insurance, you're taking a much larger risk, right? Potentially, in terms of what could potentially happen to you, and you're taking a larger financial risk by not having the health insurer's coverage, right? So even if you're like, Brian, I'm in this horrible employer plan, they only cover a very minimal percentage, right? It may not be the best, but it is protecting you to some degree, right? And that's important. So unless you're going to self-insure, meaning you're just gonna, when something happens, you're just gonna pay for everything 100% out of pocket, right? Unless you have the financial resources to do that, I feel like health insurance is a must. A couple of other reasons to just sort of validate this: healthcare costs are extremely high, right? If you've ever had any work done at the dentist, if you've had labs done for your doctor, and you look at the line item bill, right, for what they're charging for certain things, it can sometimes be astronomical, right? Um, I'll speak from personal experience. My father, several years ago, um, had to be hospitalized for a procedure. He had had a procedure, he had had a surgery that over time had he had internal scar tissue that had built up because of this procedure. So he went back in to have it checked out, and because of that, he was hospitalized. He had to have another procedure to remove the scar tissue. He was hospitalized. He thought he was going to be out of the hospital like within 5 days. That's what he was quoted. But he had complications. He ended up in the hospital for over a month. His total bill, and I looked at his hospital statement, and they accounted for every rubber glove that was used, right? Every box of Kleenex, any cost that was associated with him being in that hospital bed for over a month. It was $500,000. $500,000 between his insurance, between Medicare, between everything that he had. He's of retirement age. Um, Thankfully, what, like 99% of it was covered. Otherwise, if my dad was self-insuring, he would have had a hospital bill of over $500,000. It's crazy. It's crazy. And that was something that my dad just could not have anticipated happening. Um, it would have crushed him and my mother financially, right? So dealing with just the stress of the medical situation alone was very rough. So imagine having that financial stress. thank goodness that they had insurance, right? It would have definitely depleted, um, my parents' savings. They would have probably been forced, if he was self-insuring, to probably have to sell their home that they've lived in for over 35 years. Like, we don't want to put ourselves in these situations. And that's why I feel like this is sort of non-negotiable, that we definitely need this. We definitely need it for ourselves, and we certainly need it for spouses, partners, and our kids. All right, I'll get off my soapbox. um, if you have uh, health insurance that is covered by, or that is being provided by your employer, right? Um, Oftentimes, you may have a spouse or a partner and children who are covered under this plan, right? Um, it really sort of pays to stay on top of that group policy, right? And what they're offering. Um, this is a benefit that a lot of people don't have. And this is why we had that huge movement of the Affordable Care Act, right, during the Obama administration, to try to get as many people insured as possible, because companies were cutting a lot of these benefits to save costs. They were doing away with healthcare benefits, they were doing away with healthcare insurance. A lot of self employed people were just sort of going without insurance coverage because of the high costs, right? So if you are an employee and you have employer covered insurance, this is a great benefit, even if you're paying for a portion of the premium. Um, for example, your kids, they can be covered up to the age of 26, right? So if you have dependents that are being covered, they can stay on your plan as a parent, um, till the age of 26, right? So, for example, my son, um, he's a sophomore in college, and the colleges require that he have student health insurance. Well, under my plan, because he's already covered, I don't have to pay that expense at college for him, right? And he can stay on my plan until he's 26 years of age. So, as he's sort of starting out his adult life, um, it's good for me because I know that he's covered in case something were to happen. It's good for him because he doesn't have to take on that expense, right? So these plans definitely have benefits for all of us. If you want to do more research about what is out there and what is available to you, if you are self employed, if you don't have coverage right now, um, take a look at healthcare.gov or coveredcalifornia.com. These are great sort of consumer resources to do some shopping, right? Um, and to take a look at what's out there and what's available to us. Let's talk about life insurance now. Many of us are actually, speaking of employer benefits, many of us may have a very small, simple life insurance policy through our employer. A lot of employers will cover up to, let's say, $50,000. They'll provide you, as part of your benefits package, a $50,000 life insurance policy. In the event something were to happen to you, your beneficiaries would get that $50,000. Others have life insurance plans that will give you 50,000, but then you can add additional amounts of benefit for pennies on the dollar because you're going in this group policy. So that's an added advantage as well. Some of you may have purchased individual or sort of separate, outside of your workplace, life insurance policies. You may have heard of a type of life insurance policy known as term, right? It's a very simple life insurance policy, right? Where we go to a company that is going to insure the risk of us dying, right? And we are able to name beneficiaries to get the proceeds, to get the benefit of that policy if we were to pass, right? The goal of that life insurance policy is to give our beneficiaries, our kids, our spouse, maybe organizations, right? uh, either an income, a gift, an inheritance. Um, let's say you own a home and you have a mortgage right now, and if you were to pass away today, right, would your spouse, would your partner be able to cover that mortgage on their own with just their single income? Possibly not. So the life insurance policy covers, in the event something were to happen to you, these obligations that the people who you leave behind would have, right? Um, Maybe your kids are going to be going to college, and part of your total life insurance amount of benefit would be to include, oh gosh, what if something were to happen to me? I would want to make sure that they go to college. So maybe we need to have enough life insurance to make sure our kids go to college, to make sure that the mortgage is covered if I'm not around, right? And it's just my wife and my kids. Um, so term life insurance is based on a certain term or a specific amount of time. It could be a 10-year policy, it could be a 15-year policy, 20, 25, go out as far as 30 years. And you pay a premium, a monthly premium for a certain benefit to last for that term, right? So, for example, I'm 46. Let's say I have a 20-year term life insurance policy for $100,000. That's the benefit. So I know that policy is going to cover me for the next 20 years until I'm age 66. And if in the event something were to happen to me, it would give my beneficiaries $100,000. But after the 20 years, that policy is done. It's only for the term of the policy, right? So what people do is they use these policies to cover certain stages of life. So I'm 46, I'm married, I have two kids, right? One is in college, one is in high school. So I know that 100,000 may need to cover loss of income if I were to die, my kids' college education if I were to die. And I know it's sort of a morbid thing to think about, like our mortality, right? But right, we know there are only two certain things in life: death and taxes. So um, I know I'm not invincible. So for the next 20 years, that $100,000, if something were to happen to me, would be paid out and could cover those larger expenses that my wife would have. Then later in life, some people will say, well, then now I don't need this insurance anymore because I've got the house paid off, or my kids are already through college, or I don't need to have as much benefit or inheritance for my kids as I once did when I was younger. So that's why there's this concept of term life insurance. There's other different life insurance policies that you've probably heard of before. There's whole life, there's universal life. These are a little bit more complicated, or permanent life. These are more complicated life insurance policies that do a couple of different things. They not only provide an insurance benefit if we were to die, but some of these contracts also build up what we call cash value, meaning when you pay your monthly premium every month, right? Let's say you pay $200 a month for this contract. Maybe $100 goes towards the insurance part, and then $100 goes into what is very similar to a savings account, right? So you're building cash value, and that savings account earns a specific fixed interest rate. Maybe you're earning 1, 2, 3, 4%, right? So these contracts were sort of created years ago because consumers said, okay, I'm dumping a lot of money into this, right? But then if I don't die and nobody gets any value from it, like it's just sort of like throwing money away. So insurance companies said, well, what if we sort of had two benefits? We got you insurance, but then also a portion of your premium you're sort of automatically saving. It's like a nice savings tool, right? And then when you want to use that cash value, right, you can take it out tax free, right? It's just earning a guaranteed interest rate, right? Um, so there's a lot of these products as well. They get fairly complicated. So if you have a need for that type of thing, it always, always, always pays to make sure that you have, whether you're dealing with an insurance broker, a company, to explain to you exactly how the contract works, exactly how your premiums work, exactly how you can access the cash value when you need it, right? How does the underwriting work? Underwriting is the term for them determining how much your monthly premium is going to be. So remember earlier I said your life insurance premium is based off of your age, right? And your current medical condition or health conditions. So what they'll do is they will sort of do some labs. First, you'll do an application for the insurance. They'll ask you some medical questions. They'll ask for access to your medical history. And then they'll come out and do like a blood test so that they can do some lab work. Why? What are they trying to do? They're trying to determine your level of risk, right? What is the likelihood of something happening to you based on your current health, right? So if you have high cholesterol, if you have high blood pressure, if you've had hospital procedures, if you have certain illnesses or diseases, or like, what is the risk in insuring you, right? That's what an insurance company wants to determine first, right? Before they give you that policy, because they need to know, are you going to be a cheaper risk or are you going to be a more expensive risk? Because you've had issues, maybe perhaps they're determining that you're more likely uh, to not live as long as somebody else, right? So, one thing that I will say is that as you get older, right, even if you don't smoke, even if you've got a great sort of good medical record, you've been in good health, as you age, insurance policies get more expensive because you're getting closer to the probability of passing away, right? The likelihood increases as we get older. So the premiums are just naturally going to be higher. So for those of us that are younger, it's going to be more beneficial for us to look into insurance, life insurance now, because we can underwrite ourselves um, earlier in life while we're in good health. So I said I'm 46. The cost for me to underwrite myself right now and to apply for life insurance is more expensive than it was when I was 22, right? Because life has been happening and I'm not in the best of health as I was when I was 22. And certainly it's going to be even more expensive when I'm 66 and I decide, oh my gosh, I better get some life insurance, right? Just because then I'm even older, right? So life insurance is one of those things that I see a lot of people just sort of waiting to do. Ah, that's not for me. I don't need to insure anything. I'm young, I'm fit, I'm healthy. I'll do that when I'm older. That's the excuse that I hear a lot. Ah, it's expensive right now. I don't have any room in my budget to do this. I totally understand that. But just know that if you wait, it's going to be even more expensive, right? And that might not be an expense that you can afford or want to have when you're older, right? Um, so it does pay to sort of look into it now, right? Just do an assessment. What coverage do I have? Do I have zero? Do I have something through my employer? Um, do I have something? Does my spouse have something? Um, what is my household situation? Do I have kids? Do I own a home? What are my expenses? What's my income? Would my income need to be covered? These are the types of questions to be asking yourself when it comes to life insurance. Um, Now, disability insurance. Let's cover that real quickly. Most of us are covered in some way, shape, or form at our workplace, right? through workers' comp, right? This is what is used by companies. They provide workers' comp compensation. They're sort of legally mandated to do that, to have workers' comp. It's insurance that they have, which replaces your wages and medical benefits due to an injury on the job in exchange for you basically not to sue them, right? So they're insuring and protecting their risk of you getting injured on the job by providing you compensation in the event you were to get injured at your workplace. So that's the first level of sort of coverage, right? Then some companies may have short term disability, right? Where in addition to workers' comp, they have a group plan that may cover you short term, right? So you're getting workers' comp, and then through the company's plan, you might get short term disability, which is 3 to 6 months of additional income to help make up your total sort of monthly earnings, right? Some companies, probably a majority, don't. So it's sort of few and far between because it is expensive for companies to have this. But some companies may even offer long term disability. If you're unable to work for 6+ months or more, right, um, there could be coverage. So that's sort of the next layer. Then you have Social Security disability income, which you can receive for a year, right, if you're out of work. Um, Beyond that, if you are in a high risk occupation where, I don't know, you're in construction, you operate heavy machinery, the likelihood of you getting injured is higher, let's say, in comparison to me in my occupation, sitting at a computer, right? Or talking to people, um, giving advice. Um, you may want to consider purchasing either a short term or a long term private disability plan. A lot of times these are available to us through companies like Aflac. You probably heard that. They have varying levels of disability coverage, right? That replace um, your paycheck. It could be anywhere from 30% up to 60%, right? Depending on the length of your disability, of your paycheck that is being covered, right? So if you're a higher wage earner and you're in a high risk occupation, you may want to make sure that you have additional coverage beyond just workers' comp. It's just another layer of protection. What about homeowners insurance, renters insurance? For a long time, I've rented all my life. For a long time, I never had renters insurance. I just didn't think I needed it. Um, if if my stuff was stolen, whatever. If my stuff ended up getting flooded, there was a flood in my apartment. If there was an earthquake, if there was a fire, like, I don't know. I just didn't think that my stuff, one, was valuable, and I guess I just didn't really care. And then recently, I started just kind of looking at renter's insurance, and I had the opportunity to combine my renter's insurance with my auto insurance, and it lowered both of them. And I basically got the benefits of renter's insurance. Um, I don't want to say for free, but at such a discounted rate that it was sort of a no brainer. It made sense for me to have the peace of mind of that coverage, right? So, in the event that something were to happen to my property, to the place that I'm renting itself, to somebody who came and who comes and visits me, if they're injured inside of my place, um, if you're a person who has a lot of people over, whether it's family, friends, you like to host people outside of COVID, um, renter's insurance could be something that you want to look into. It's a must-have. Homeowners insurance is a must-have. You have to have it if you have a mortgage. Um, but for renters, it's sort of an optional. But I think it's worth looking into if you can get it fairly cheaply, and it helps lower some other insurance policy that you have, like auto. So what it protects against is, in the event there's a financial loss, like a fire. Um, as I mentioned before, somebody's on your property and a tree falls, lightning strikes. I mean, you just never know the what ifs, right? If that peril happens, it can cover. Um, it protects you from financial losses due to destruction, damage, or of your property or your possessions. So the things inside of your place, and it protects you from being held liable from others' financial losses. So, like I said, if somebody's visiting you and they get injured in your place, um, it protects you from being liable, right? It's really not that expensive. Um, One place that you can go to check out renters insurance is a website, www.insurance.ca.gov. That is the state of California's insurance website, insurance.ca.gov. And they will give you information on automobile uh, automobile policies, right? Renters insurance policies, homeowners insurance policies, and sort of give you very sort of valuable information on how these policies work and why you would need that coverage, right? So
Brian, I'm
yeah.
sorry. Can you repeat that link one more time?
Oh yeah, sure. It's www.insurance.ca.gov, G-O-V, insurance.ca.gov. Now, you have to look closely at some of these policies, because with renters insurance, there could be things that are not covered. So some landlords will require, right, that you have renters insurance as part of the lease agreement. So if you're in that situation, you have to look specifically at what the renter's insurance policy that you're getting does cover. And maybe there's a specific amount that the landlord is requiring that you have in coverage. Some of the policies do not cover natural disasters. So like earthquake or flood or landslide, right? Those are sort of extra add-ons. So if you live in an area that is high risk, I mean, we're California. We're in high risk for a lot of this stuff. So we've recently had landslides several years ago. We're always prone to earthquakes. You may be, based on the property, in a situation where you could potentially get flooded. But to give you an idea of how much renters insurance costs, on average, this is just average, it costs approximately $12 a month for an average policy, right? For $30,000 of property coverage and $100,000 of liability coverage. So it covers quite a bit for just $144 a year, $12 a month on average. If that gets you discounts on other insurance that you need, it may be worth looking into it, right? So that's renter's insurance. Let me go back. Are there any questions about what we've covered this evening in terms of these different kinds of policies? Maybe there's specific questions that you have. Maybe you do have a question about universal life. Maybe you do have a question about a particular company that you're using, charges that you're seeing. If there's any questions, I'd like to do a little Q&A.
So far, I don't see any questions in the chat. Does anybody have any questions?
If you do have specific questions later on, maybe you do say, you know what, Brian, that was a good reminder. I'm going to go take a look at my automobile insurance policy. And then questions come up after the fact. Something that you can do is you can email Lisa your questions. She'll always forward those on to me. If she doesn't know the answer, I'll get the answers to you. If I don't know the answers, between Lisa and I, will get the answers for you. So if after this session, maybe it's a month from now, even, you go, oh my gosh, I remember when we were talking about life insurance, and I think it's a good time for me to look into that and get some. I could probably use Brian and Lisa's help. Feel free to email Lisa, and we're here to be a resource for you. That's the whole point. The workshop is to give you information, to give you knowledge, to help you think about your situation. And then after the fact, we're always here to help you deal with your specific situation. So if you want to talk to me specifically, if you have questions that you want to pass through Lisa, she's the point person. Get a hold of her, get in touch with her, and we'll get the resources for you. The next session that I'm going to be doing it will be June. It will be June 10th. And we will be talking about improving your credit score. So we had a huge showing for sort of dealing with credit and debt. And there were a lot of questions. And one question that sort of stuck out in my mind is people are always asking, well, how do I actually improve? How do I get my credit score to go up? How do I raise it? So I'm going to specifically target that topic next time on June 10th. I know there's going to be some other sort of life skills sessions that Lisa has scheduled and is coordinating. So Lisa, I don't know if you want to plug any of those.
Yeah, I have on June 3rd at 6, I'm going to be having it's going to be about childcare services. So I'm going to have CCRC, which is a childcare resource center, come on and actually speak about low cost childcare and subsidized childcare. So those of you who are looking for work, but have not been able to because you guys have kids at home and you guys find childcare really expensive, I highly suggest you guys to come on and join us on Zoom as they will be presenting that information for us.
That right there, guys, is an awesome resource that affects every family. We're always, having to juggle work with raising our kids, and oftentimes we have to sacrifice one or the other to do the other. So that's next week, right, Lisa? On the 3rd?
Next week, next Thursday at 6 p.m.
Awesome.
on Zoom.
So yeah, make sure that you RSVP with Lisa. And again, if you have any questions about what we've covered or you have any other financial questions, you can always pass those through Lisa. So thank you guys so much for coming this evening and attending the workshop. And I'll see you in 2 weeks.
All right. Thank you, everybody. Have a wonderful night.
Bye.
Bye.